Time for business now. Matthew's here, and today seeing the launch of Europe's new bailout fund, as we warned you.
That's right. Finance ministers are meeting in Luxembourg today for the first meeting of the European Stability Mechanism. To give it its full title, the ESM, as we prefer to call it, is the permanent bailout fund for the Eurozone, replacing its temporary predecessor. Now, individual countries will be putting in 80 billion euros. The rest is then raised on the markets to give it a lending capacity of up to 500 billion euros.
OK, so who's paying what then? That's the crucial question.
Well, Germany will pay almost a quarter of it. They're really standing behind this. We've look at the top 5 contributors here. Now, interestingly, you can see Italy and Spain there. They make up 30%. And of course, it's those two countries, particularly Spain, that may need help from the fund. Now, one existing problem is, of course, the banks in Spain. And last week, the finance ministers of Netherlands, Finland and Germany said that they don't want to see the fund used for past problems, only future problems. That's going to pose a headache for Spain if that goes through. So still some details to be ironed out with this fund.
Of course, when it was all announced, big relief for the markets. But how have they been reacting today? They're
not in such a good mood today. We can take a look at how Europe is opening up this morning, and all the major indices in Europe are down by around 0.7 to 8%, as you can see there. And I can just tell you as well, we've heard this morning the Bank of France is estimating that French GDP actually contracted by 0.1% in the third quarter. Over in Asia, markets were in a similar mood, all trading down today. I can tell you as well that the Nikkei is closed, and I'm sure you'll be interested to know, Stuart, that it's closed because of the annual Health and Sports Day, which I think sounds like a lovely idea.
Yeah, everyone's doing the egg and spoon race. Exactly. Great stuff. Now, conflicting reports for you. We like those here on France 24 over the future of 2 well-known French brands.
Yes, now those brands are the Fnac, of course, the music, electronics retailer, and La Redoute, which is a big clothing online retailer. Now, they're both owned by the big group PPR, but according to reports in the French media, the future of both of them seems less than certain.
Could Fnac and La Redoute be up for grabs? Yes, according to the French press. Luxury group PPR is looking to sell off the music retailer and online clothing store to focus on its more profitable brands.
For a luxury brand to exist, it has to invest hugely in communication, opening new stores, particularly in emerging markets. To generate new resources, PPR has to prune back its less profitable branches to concentrate on the luxury industry.
Neither Fnac or La Redoute have been doing well for PPR, with the music retailer slipping as purchases move online and the internet clothing retailer losing even that advantage as consumers look elsewhere for more up-to-date styles. For investors, PPR has too much under its belt, with luxury brands Gucci and Yves Saint Laurent and Puma in sports, leaving La Redoute and Fnac dragging down profits. The group now has 2 options, either finding a buyer for the 2 companies or floating them on the French stock exchange and selling shares over time. Unions aren't too happy, fearing the intentions of any future buyers.
Si les résultats sont au rendez-vous,
if the right result comes out, then there will be money all around. But if that's not the case as usual, then the employees will have to pay the price.
For now, PPR's not talking. Its board should be meeting sometime this week to decide on a course of action.
I can tell you as well that Reuters is reporting that PPR will be making an announcement on that on Tuesday. Well, let's get some more of the day's company news. And the UK has been spelling out its concerns over the merger of aviation giant EADS and the defence firm BAE Systems. The British Defence Secretary said both France and Germany should reduce their stakes in EADS. If not, he said the British government is prepared to veto the deal.
3 airlines are getting together to share some routes. Air France-KLM, Abu Dhabi's Etihad and Germany's Air Berlin will offer access to some of each other's services. 5 destinations in Asia and Australia will be opened up to Air France passengers.
And American companies should avoid doing business with China's 2 leading technology firms. That's the view of a parliamentary committee in the US. The panel says Huawei Technologies and ZTE should both be blacklisted. It thinks they pose a national security threat. Well, turning to Venezuela now, as we've been reporting, Hugo Chavez has won a 4th term as president, and the country is the 5th largest oil exporting country in the world. Well, that presents challenges as well as opportunities.
Oil is more than just an industry in Venezuela. With the nation dependent on it for 96% of its foreign income, it's a vital lifeline. President Hugo Chávez's government's controlled state oil firm PDVSA since it fired 40% of the workforce in 2003, the result of a strike aimed at forcing him from power. However, rather than investing in the industry as oil prices rose, Chávez hoovered up funding, ploughing it into social programs. It made him popular with the nation's lower classes, but at the expense of leaving a creaking infrastructure behind. The effects of that became obvious just 2 months ago, after a massive explosion at the Amuay refinery, Venezuela's largest. Officials put the cause down to a gas leak. It's all raised questions over what some see as a dangerous over-reliance on a single sector.
People think that as long as the prices are high, it's all going well. There are profits, return on investments, but when oil prices fall, then the model collapses.
In terms of income equality, Venezuela's managed to become South America's #1 nation, but its underperformance in other areas has given it little means to pursue foreign investment, and that could well have left its economy at risk. A potential problem that may be compounded by Chávez's insistence on exploiting the vast Orinoco crude belt, one of the world's largest untouched reserves.
Something a little bit unusual now here on France 24. Matthew's got a job offer for you, particularly if you like the outdoors.
Yes, if you like the outdoors, if you like perhaps being able to sit around all day reading, just occasionally leaping up and down. Why? Well, maybe you could. See what you think of this. This is to be a living scarecrow. Now, a young graduate, no less, in the UK has taken a job as a living scarecrow in the east of the country, in Norfolk, actually. Yeah. He's going to earn £250 a week. That's about €300. And there we can see him in his full scarecrow. He does look pretty scary, doesn't he? He does look quite scary. He has to leap up and down when partridges come into the field. They found that a normal scarecrow just wasn't doing the trick. So that student just shows you a sign of the times, though, that graduates, that's very the kind of career option.
I want to see the advert. Must have ability to flap arms or something. And Angela Merkel, I wasn't say talking of scarecrows, I better be a bit careful. Nothing to do with scarecrows. She's making a very brave trip tomorrow. Yes, and we'll be keeping a close eye on this tomorrow. She's going to Greece. Now, of course, it's a brave trip because she's got a lot of criticism in Greece from the media in particular over their perception in the country that the austerity they're suffering, a lot of it is to do with German demands. She's going to go and meet the Prime Minister, Antonis Samaras. Now, he's saying that they desperately need this bailout of the latest instalment, 31.5 billion euros. Otherwise, the country is going to run out of money by the end of November. So good luck to her with that. Exactly, and I'm sure you'll be telling us all about it tomorrow as well. Absolutely. That's Matthew's job for tomorrow morning. That's the news from us for the moment. Claire's got the very latest after the break. Stay with us.